Welcome back, Nuclear News family. I'm away from the studio today, but it's not going to stop me from bringing you nuclear news, right? I hope you are enjoying watching uranium prices go up. It's what we've been talking about for the last 2 years straight, right? And it continues to play out as expected. The uranium spot price hit $100 per pound this last week. Here is the price action on the URNM, Sprott, Uranium, Miners, ETF. Year to date, just the start of the year, up 17.66%. The stock market, S&P 500, only up 0.96%, right? So uranium is massively outperforming practically everything else. So let's dive through the news per usual. What is going on in this space? Is the supply crunch getting accelerated? Is the nuclear renaissance being accelerated? World's biggest uranium miner warns of production shortfall. Kazatomprom says sulfuric acid shortages impacting output. Uranium prices have soared on demand boom and supply setbacks. This is probably the biggest supply setback because Kazatomprom provides the most uranium worldwide, essentially. They are the biggest player in this space. And so if they are saying they can't even meet their supply targets, then the gap between demand and supply is just going to get even wider, right? And that's just what we're covering. Every single one of these news stories seems to be doing that. World's biggest uranium miner warns of shortfall, just as nuclear demand takes off. So as supply is falling, demand is taking off. The setback adds to a list of supply challenges that have helped to catapult spot uranium prices to 15-year highs, and nothing is slowing that down. Let's dive a little deeper. This comes from RBC Uranium Watch. We expect the announcement from Kazatomprom to further tighten the uranium market and drive uranium prices higher, as the company will likely need to purchase uranium to meet contract commitments. So they're going to have to purchase uranium off the open market, just like everyone else, just like the Sprott Physical Uranium Trust is doing. The Sprott Physical Uranium Trust reaches $6 billion in net asset value, right? So we have Wall Street vehicles taking the supply off the market. We have companies like Kazatomprom having to buy it off the scarce, tight market as well. We had already assumed Kazatomprom produces slightly below 2024 targets in our uranium S&D outlook due to sulfuric acid challenges, but the lack of an actual production target for 2024 indicates to us the production impact could be more severe, and there may be significant downside risk to the 2025 production target. We also view this as potentially a multi-year issue that spills out beyond 2025 as wellfield development in Kazakhstan is delayed and impacts future production. In our coverage, we view this as positive for Cameco and NextGen Energy. Anyone who's selling uranium right now, it's extremely positive, right? And we know this supply crunch is a multi-decade issue. Every single video in the past, practically, I've put up the chart showing how no one is expecting the supply-demand gap to be filled over the next few decades, right? And so at least through 2025, no one expecting it, especially with Kazatomprom not getting its act together and getting the supply out to market, right? Absolutely unbelievably massive for the upward price pressure in uranium, right? And here's a look. This is the uranium supply demand shortage just in North America, right? Massive amount of demand in blue, and then mine supply there. So again, like where is the US going to get this uranium? Well, the US is doing everything it possibly can. Department of Energy announces next steps to build domestic uranium supply for advanced nuclear reactors as part of President Biden's Investing in America agenda. So we have Kazatomprom taking supply off the market. We have the Sprott Physical Uranium Trust taking supply off the market. We have utilities who actually need this fuel taking supply off the market. We have the US government subsidizing the acquisition of this scarce resource with a massive amount of money under the HALEU enrichment contracts, which have a maximum duration of 10 years. The government assures each contractor a minimum order value of $2 million to be fulfilled over the term of the contract. Enrichment and storage activities must occur in the continental United States, right? So there's a scarce supply in the United States. The government's subsidizing it. They're going to pay any price. That's going to cause upward price pressure, period. Together, the United States, Canada, France, Japan, and other United Kingdoms have announced collective plans to mobilize 4.2 billion in government-led spending to develop safe and secure nuclear energy supply chains, right? So now we have a wall of government money moving into this space while the supply is tight. Again, what is going to happen? They're going to pay a premium to get this uranium. And obviously, that's great for miners, right? And so, in a nutshell, Biden offers companies millions to help US break Russia's monopoly on a vital resource. Biggest expansion of nuclear power for 70 years to create jobs, reduce bills, and strengthen Britain's energy security. Roadmap sets how UK will increase its nuclear generation by up to 4 times to 24 gigawatts by 2050. Think about what that just did to the demand curve for uranium. It just accelerated it even further up while the supply curve continues to shrink. Doesn't get bigger than this. France drops renewable targets, prioritizes nuclear in new energy bill, right? It's all about nuclear. The biggest countries in the world going big into nuclear does not get better for the miners that own this valuable resource. We're going to have to continue staying on top of this market. Now, obviously, this is long-term fundamentals over many months. Short term looks good too, but anything can happen in the short term. There's some leveraged longs out there that might need to be cleared out, but the market's starting to understand that simple math is driving the market. If there's a massive amount of demand for a scarce resource and the resource is getting scarcer and scarcer, price goes up. Simple economics, we're going to have to stay on top of this market.